Hello, my name is Irina Urishkova and I'm your nonprofit auditor. And this is video number 2 where we will continue talking about revenue recognition in nonprofit organizations. Before we begin, I want to make a disclaimer that these videos are not intended to be authoritative literature. They are my viewpoint and interpretation of the standards. Each organization contracts, contributions are unique, and it's critical for a nonprofit to consult your own financial advisor, accountant, or auditor. Let's start. In the video number 1, we discuss 2 types of revenue in nonprofits. Exchange revenue under 606, when the recipient of the services is the same party that pays for the services, and contributions, non-exchange transactions, when the recipient of the services is different party that pays for the services. And we give an example when City of San Jose pays to nonprofit to provide beautification services to overall cities of the San Jose. In this case, beneficiary of the services, public in general, who is paying for services, City of San Jose. This is the example of contribution. There is no exchange. Therefore, under contribution standards 958, revenue should be recognized as soon as it's unconditionally promised. So if the City of San Jose provides grant that indicates $100,000 a year for 5 years and asking nonprofit to provide beautification services for the City of San Jose, there is no condition. The full amount will be recognized as revenue in the year 1. There will be no revenue in the year 2, 3, 4, or 5. This is an example of unconditional promise. City of San Jose, as a donor, could put some condition. And if the condition exists, then revenue cannot be recognized until the condition is met. There are different types of conditions can exist, and let me give you an example. Condition can be that the City of San Jose can say that we will provide $100,000 a year if we have sufficient amount of funds. This is if it's a condition. And because it exists, it's conditional promise, which is not really promise, and no revenue will be recognized until City of San Jose actually pays money. City of San Jose can give another condition and say, we will give you $100,000 a year for 5 years if nonprofit can find matching contribution from a different donor in amount of $100,000 a year. This is matching condition. Again, and until this condition is met, no revenue is recognized. So as soon as nonprofit found matching donor, this conditional promise becomes unconditional, and the full amount of $500,000 would be recognized as revenue. Another very common condition is expense reimbursement. City of San Jose can say, we will give you $100,000 a year for 5 years, but you have to spend money first and then apply for reimbursement. That's a condition. Nonprofit have to spend money first and then apply for reimbursement. To summarize, if the contribution is conditional, nonprofit cannot recognize revenue until the condition is substantially met. Then the contribution will need to be recognized for the full amount of unconditional promise. Once the revenue is recognized, only after that we have to look at revenue and see if it's restricted revenue or unrestricted revenue. One note, when we talked about exchange transaction, when the City of San Jose pays to a non-profit for the services to be provided directly to the City of San Jose, this is exchange, it cannot be conditional or restricted because it's earned revenue, it's exchange transaction. In exchange transactions, there cannot be conditions or restrictions. Conditions or restrictions applicable only to contributions, when non-exchange transactions exists. So we just said, what is a condition? So if the condition is met and we do recognize as revenue, we have to look if the revenue is restricted or non-restricted. It's also called revenue with donor restrictions or without donor restrictions. What it means, that restrictions can only come from the donor, not from the board of directors, only from the donor. Donor can say, we restrict the funds for specific purpose or specific time frame. Restrictions, as I mentioned just now, can be two types: purpose and time. When restrictions exist, when the donor specify that nonprofit have to use funds for the purpose that is narrower than overall mission of the organization. Let's just say, in our example, nonprofits provide beautification services in Bay Area. But City of San Jose is specifically asking to beautify City of San Jose, not the whole Bay Area, nowhere else but in the City of San Jose. So it's narrower than overall mission. Therefore, it will be restricted by purpose. And in this case, if it's for 5 years, 100,000 a year, therefore it's also restricted by time. Restricted revenue, it's affecting releases of net assets each year as the restriction is met. It's not affecting revenue recognition. As we mentioned, revenue is recognized in full in year 1, but then the full amount will be shown on a balance sheet as restricted net assets, and as restrictions are met, that will be releasing as it's every year and when the purpose is met. Once again, to summarize, nonprofits have two types of revenue: exchange transaction or earned revenue, and non-exchange transactions or contributions. Only for contributions, terminologies such as conditional grants or pledges and restricted donations applicable. For exchange transactions, we cannot have restricted revenue or conditional revenue. Only for contributions. Before we recognize revenue in contributions, we have to see if there is any conditions. Conditions as a barrier that needs to be met before revenue is recognized. And once condition is met, revenue is recognized. After that, nonprofit have to look if the revenue is restricted or non-restricted. Restricted revenue, if it's restricted by time or by purpose. Purpose, restricted purpose exists if the only donor indicates that the funds can be spent in some way that is narrower than overall purpose or mission of the organization. And that concludes video number 2 on revenue recognition for nonprofits. Please come and see me for video number 3 for in-kind donations or in-kind revenue. Thank you and have a wonderful day.